Just yesterday, the stock market had its worst day in years, but is there an opportunity for us to make money, or is this a good sign for you to sell, panic, and run from the hills? I've got some interesting information that you absolutely want to know for now, but also next month. Let's go ahead and break it down. So, there's been a lot that has gone on both today and yesterday, and there's a lot left in store for the next month or so. And I've got a lot of stuff to break down, but most importantly, I want to use this opportunity for what's going on in the market right now to help you become very wealthy in the future. And this is a perfect opportunity to do so. But first, what is going on? Okay, let's first break down what is going on in the stock market, and then I'm going to give you about 3 or 4 tips on how you can use this as an opportunity for you. So first, I did warn you a little bit about what is going to happen and what did happen last week. For example, I have a monthly call with all of my students inside the Investors Toolkit. I said flat out, last week was going to get interesting because of what all was going to happen last week. What all happened last week? We had earnings calls for some of our biggest companies, some of those tech companies. We had a rate announcement from the Fed. You guys know, we just did a video about a week or two ago around calendars and how you know what type of earnings announcements are coming out. This is how I knew all of these earnings dates were going to line on the same week. And we had an economic calendar, so you know when the jobs announcements are going to come out, when earnings are going to come out, and then when the Fed is going to speak. So you knew this already if you watched the video. There you go. So we knew earnings were coming out all during that week. We also knew that Jerome Powell was going to speak on rates, and then we also knew that the jobs report all hitting around the same week. And every single time that you get that, you're going to see the stock market react. So we knew it was going to be a very interesting week. Now, I did not know it was going to be a worst day in the last 4 years. Okay, I ain't got a crystal ball, but I knew it was going to be quite interesting. So that is what is going on. The thing that really took the spotlight was 2 things. Number one, the fact that the Fed said they're going to keep rates steady, but they're open to cutting rates next month in September. Circle the word September, we're going to come back to that. Why is that particularly important? Well, last year we expected 2 rate cuts. Well, we are already in August, and now the expectation is they're going to do 1. The question is this going to be just a small rate cut of 0.25%, or now is it going to be a rate cut of 0.5%? That's a 0.5% cut. And is that going to help or hurt inflation, or is the Fed just too late and are we going to go into a recession anyway? Now, or we could also say, is the recession talk overblown or is it not? Because the unemployment rate did go up just a bit, and that brings us to what happened on Friday. Friday, we found out that the unemployment rate did tick up a bit and people aren't finding jobs and companies are slowing down on hiring. But remember, the jobs report always reports what happened the previous month. So now is August. What we are finding out is companies were slowing down on hiring in July. So all of this happening at once is what spooked the stock market, what has caused this mini crash within the last 2 days or so. But ironically enough, on Tuesday, August 6th, at least, well, my watch is blocking the date, but August 6th, this is kind of, not an important point because the stock market was up 300 points today. And that brings us to the volatility of it all. Anytime that you see the stock market have these violent swings, what we do know, I'm going to circle back to this near the end as well, is anytime, and we saw this during the pandemic as well, when you have one of the worst days, sometimes the best day is actually right around the corner. And there was a study by JP Morgan that said within the last 20 years or so, the best days and the worst days are usually within 2 weeks of each other, which tells you, the investor, that one of the best things you can do is not to sell, is not to panic. So those who sold and panicked on Friday or on Monday, you missed out on what could have been one of the best days. And what that tells me is, again, I don't know what's going to happen on Wednesday, Thursday, Friday, or any point during the rest of the year or any point in the future, but we're going to have another bad day at some point, and another good day is going to happen at some point in the future, and you're likely going to miss it because there is not going to be a way for you to hop in and hop out and be perfect every single time. So there's that. But that is what happened. The market is very spooked on what is going on. Are we going to a recession or not? But there's also still good news. The unemployment rate holistically is still low. We are still moving into what is known as the September surge, when companies do a lot of hiring for the holiday season, because they do this almost every single year to get a whole bunch of employees for the holiday season. This is what they do, and the unemployment rate generally does tick down and make it look good for the unemployment rate, which does help the stock market. Except September, for the last 100 years, has been one of the worst months for the stock market. So there is that as well. So there is a lot of conflicting data going into this. When it comes to the Fed, if they do cut interest rates, does that help the stock market? Because generally speaking, you cut interest rates, it makes borrowing easier. It helps people to buy more things. It helps companies to hire, to borrow, and stimulates the economy and can stimulate the stock market. That can help the stock market grow, but it can also help inflation. How is that going to impact the stock market as well? So a lot of unknowns, which brings everything back to you. What should you do in a moment like this? The first thing is what I told y'all last week, and it's what I told you the week before and the week before that. What we saw in the last 2 days primarily was what stocks lost the most money. Tech stocks. Tech stocks lost the most money. And I told y'all last week, and I told y'all a week before that, to diversify. I didn't say sell all your stocks. I didn't say sell all of your tech stocks either. But I did tell y'all to diversify and trim some of those tech stocks for reasons like this. This is why you subscribe and listen to people who do this for a living, right? And study this. Because we know things, okay? This is the whole point of diversifying. That's not saying I'm perfect or better than anybody else or none of that stuff. But I done been around the block enough times to know after a run like this, meaning tech stocks have done well, we going on 2 years now, companies like Nvidia, y'all see my portfolio, you up like 600%, don't get greedy. Okay, sell a little bit, put it into other areas that aren't as vulnerable, because when the stock market hits a shock like it did, what are people going to sell first? The stocks that they've been up already. And you may not have been up 600%, but the people who are, that's what they're going to sell first. Right? And if you just learned about the stock market yesterday or a week ago, you just started investing, 2 weeks ago, you may not be up just yet, that you are going to sell and you are going to lose money because you hadn't diversified just yet, right? So pay very close attention. This is one of those opportunities to go back and watch those videos on energy stocks and finance stocks and those dividend stocks and start to see what are the areas of the stock market that are less vulnerable in times like these, okay? Notice, again, do not sell everything, okay? That moves to point number 2. This is not a time to panic. This is not a time to run for the hills. Again, staying invested is one of the best things that you can and should do in times like this, because there is an opportunity and a chance where this can just be a 2-day blip that you absolutely forget about. Right now, we are in the year 2024. Ain't none of y'all thinking about 2022. 2022 was a bad year. We all forgot about it and moved on. In 2023, everybody was talking about the recession that never actually happened. The stock market was up, and we have gone on to the next thing. And here we are in 2024, where the stock market is still up double digits. You had 2 bad days, and everybody's panicking and trying to figure out what to do. Okay, and the stock market was up today on Tuesday. Okay, I still don't know what's going to happen on Wednesday. I'm not going to know until Wednesday happens. Okay, but this is the psychology and why I go back to the things that I do and why I invest the way that I do and why I talk about the stock market the way that I do. I tell this in our members only, in my courses, I check my portfolio how many times per year? How many times do I check my portfolio per year? Twice. Only twice. June and December. That is it. Because I know that if I'm checking my stocks every single day, or if I happen to check it yesterday and log in, I'm gonna act a fool. right? Because I'm going to be overly emotional and make a rash decision because of something like this. I need to take a long-term look. So I'm going to check and have these long-term breaks before I come back and log in and do all this stuff. You don't need to be in there every single day because it's only going to do more harm than good. So take these things to heart and use that, because again, it's not going to help you to stare at the market every single day and react to every single headline every single time. Because again, go back to 2020 and look at some of those headlines. Market down 900 points and then turn around. It's the best day since 1933. What? Right? Within 12 days of each other. Right? I teach a class almost every single day, and that's one of my favorite slides that we talk about. You can register for that class. That link is right here, right? But when we talk about that, I show you guys, hey, these headlines don't make sense, but it happens often, right? It happens today, right? Just yesterday, when the market was down close to 1,000 points, it was one of the worst days in the last 4 years. And then boom, the very next day, here we are up 300 points. These things do happen, but when you are reactionary and you're into it and you're trying to buy and sell and react, that is how you run into these mistakes. That is how you panic sell instead of planning. And that is not what you want to do. And that is how you lose money. So if you want to use this opportunity to build wealth, continue buying, continue with your plan. So if you are someone who buys index funds, which something I am doing and something I would, be happy if that is what your plan is, you should continue doing it on the schedule that you are going to do it on anyway. So if you get paid every 2 weeks and that payday happens to be this Friday, then go ahead and do it regardless of what happens in the market. Continue doing it, right? If September happens to be one of the worst months, and it might be, and we're, at some point I want to plan on doing an entire video on just September in general and break down what just happens during that month. It might be. Continue investing anyway, because again, go back to 2022. Those who invested in 2022, those who invested in Nvidia in 2022, like I did, right? Look at you now. I'm not worried about where my Nvidia stock is now. I honestly can't tell you because I ain't look at my account, because I'm up by 600. Does it really matter if I'm down 10 or even 20 today? No, it really doesn't, right? Because I'm a long-term investor and because I invested when the market was down, okay? When the market was down is when I just so happened to have invested. That doesn't mean that just because the market is down, I'm investing, right? I just did my research, invested, and continued to invest during those periods. This may happen to be one of those periods. But again, everybody says buy low, sell high. The market was low. What did you do? Right? It's kind of like one of those character moments of, people say they're X, Y, and Z, but you really don't know who you are until your character is tested, right? You really don't know until you're hungry how good of a person you are. You don't really know until you don't have money who you really are and how you really act until you are in a tough situation. This is one of those situations. What kind of investor are you? How is your research process really going to play out? How true to your investing process are you going to stick to in a moment like this? We all fill out those questionnaires on what happens if the market falls X, Y, and Z. Are you going to hold? Are you going to sell? Are you going to do whatever? We just found out, right? In a mini sample, we just found out, okay? So all this should be a pep talk, okay? All this should be a pep talk. You have what you need to move forward. Continue buying. Do not panic sell, especially in your 401k. Don't you even think about selling your 401k or cashing out because of 2 dadgum days. Okay, 2 days? The whole year done been up. Sorry for raising my voice. Okay, but the whole year primarily has been up. And you're gonna sell for 2 bad days. We had 250 some odd. Well, at the end of the year, we're gonna have 250 odd days of the year. For two bad days, you're gonna cash out your whole 401k. That don't make sense, bruh. No, relax. If you done been through 2022 when the market was down 18%, 2 bad days should not scare you, okay? Keep going. keep investing. If you want to learn how to diversify, what stocks make sense to diversify into, and perhaps a class that you want to take that's free that can help you learn some additional investing techniques, that link is right here. If you want to learn those other stocks, those videos are right here.